Good morning. Thank you for joining us. What is your tactical call across Asia? Is there risk aversion due to macro uncertainty in the region?
I mean, our broad call and our broad portfolio exposure is still to be overweight Asia. It's still a very attractive place in which to invest. Our point is you can access it either direct through companies listed in Asia or indeed through companies listed in Europe, the US or wherever. I don't think one has to make clear black and white divisions between markets. What one has to make are clear black and white divisions between individual investments. So it's very different, say, investing in a European retailer selling to a sluggish European market and, say, a European consumer goods company like a Nestle with worldwide operations and fast growth emerging market operations.
Hugh, hi, morning. So you recently stated that value has dried up in Asia. Is it time to book profits in Asia then? How have you altered your view when it comes to Asia?
No, we haven't altered our view at all. We're still very comfortable with Asia. I think when one's looking at value within Asia, certainly over the next year or two, it's hard to argue there's great value simply because there's not great earnings growth. So in aggregate for our Asian portfolios, we're talking about earnings growth of under 10% and a valuation of about 14 times earnings. And it's hard to argue that's tremendous value. There are some tremendous companies within that, and certainly for people with a horizon longer than the next 12 to 24 months, I think there's some great opportunities because these are companies that will prosper and will do better as economic growth picks up again.
At 14x aggregate forward earnings for the region, is it time to buy or do you expect more downside to the market, and are you sitting on some cash waiting for better entry points?
Well, we're relatively comfortable accumulating at current levels 14 times earnings. We don't see earnings falling in aggregate. What we do see is earnings growth, the rate of earnings growth falling. So traditionally, throughout cycles, earnings in Asia have grown the best part of 15%, 15%. Now we're seeing, certainly over this period of a year, 2 years, 3 years, we're not sure how long it will be, earnings growth down at more like 7 or 8% growth. So that 14 multiple will, for example, come down to 13 to 12 and so on. It's quite reasonable, and should earnings growth pick up, again, back to the 15% level, buying today will prove to be a good investment, but it's only for investors, long-term investors with a decent time horizon, not for shorter-term speculators.
Hugh, do you expect rates to rise in India anytime soon?
I think rates could go up in India. There are certain things in India that one worries about, but then in a global context, we would expect rates to remain relatively low, but India's will continue.
Hugh, what is your view on rupee?
Well, we're hoping that we might see, contrary to what people are expecting, a degree of strength coming through in the currency after the weakness we've seen. But again, notoriously, the rupee and rates have been difficult to predict.